over to our first speaker. Over to you, Nitish.
Thanks, Kerry. And thank you for having me here. It feels intimidating to go up first against such a distinguished panel and to do this 10-minute TED Talk style conversation, but I am looking forward to this. As Kerry and I and the team spoke about this, it's an interesting moment to be talking about what we are seeing in terms of AI. I often joke being an analyst and advisor in the space. It's a bit like being a consultant, but also a therapist, given the current mood music in the industry. So I'm going to reflect on what we are seeing, a state of the union, if you will, in terms of where our clients adopting AI and what are their patterns around it. What are we seeing in terms of where are we moving beyond pilots? And also, more importantly, it's not really about AI, but how do we get ROI from this? So let me start with a few of our convictions in this space. So if we move on to the slide after this, and I think we just spoke about this content. So let's just talk about this story for a moment, right? The story of the what I call the tech services industry, whether it's technology, business process, or engineering. It's an interesting moment, as I said, to be talking about this today. If anybody's been following the news over the last month, whether it's the great SaaS sell-off triggered by some of these new knowledge management tools, or even, I kid you not, a research note from the future that just dropped yesterday and caused a market sell-off from Citrini Research. Never a day goes by when there are, less optimistic takes in the media and the stock market, frankly, around what AI will do to compression in services, but also software. But is that really true? When we move to the next page, we'll see what are we seeing in the market. So when we think about what's happening in the global tech services market, the next chart will show you where is this going. So we'll track the top 20 publicly listed services providers that represent cumulatively about $400 billion in spend. And I don't know if it's me, but I can't see the next slide. So if we move on, uh, this represents that cohort. Thank you. Fundamentally, this cohort, which represents about 350, $400 billion in spend, and this is only organic constant currency growth, has gone through a sea of change in the last 3 years. The interesting thing is, we came off the post-pandemic high in 2022. We went through a period of a macroeconomic realization, but also geopolitical friction, which still continue. But the good news emerging out of this is the industries coming to slow but sure recovery. This group as a cohort grew at about 1.1% in the quarter ending December, and we are forecasting a growth at about 2.5, 3% for the rest of the year. It's nowhere near the historical average, but we are starting to see some light at the end of the tunnel. What we are also seeing in terms of client behavior is clients are moving from what we call BAU, business as usual, to CAU, crisis as usual, where clients are saying we have to embrace a wartime posture. We can't delay spending any further. We have to get on with it. So we're seeing some of the fog of perma crisis dissipate in the global services industry. Now, when we talk about this from the lens of AI, the next few pages will show where is AI and specifically agentic happening or taking place right now. So Shivani, if you move to the next page, and let me define agentic for a while. I often joke that when people talk of agentic, it's a bit like the Matrix. They're talking about agents. It's less about agents, but it's about a system's agency to undertake a task. Right now, where we are in agentic is really the first innings where you can do certain tasks and certain workflows. We are not down to full process autonomy yet. But despite that, where we are seeing agents or these systems of execution take space is really around horizontal process areas. So think of enterprise operations around finance and accounting, customer support, IT, and so on. Just over a fourth of all of this adoption is happening on industry specific process. So if you go to the next page, you will see where are some of those industry specific processes. So led by banking and insurance, some of the leading steers in terms of adoption generally, followed by healthcare and high tech. But the point is simply this, if you really think of the nascency with which agentic AI started, there's been a fast movement to adopt it. The trickier thing, however, for clients has been how do they move beyond pilot purgatory to move it into production? And I think that's where we're seeing a lot of conversation. One of the biggest shifts we're seeing in that is it's not just about slapping technology on to an existing process or way of working. It has to be about an operating model reset. And that's why we believe AI is not going to be a sprint, but it's a value marathon. So now with this context aside, let me start talking about how do you scale this and how do you make AI work? And what are we seeing from frontier organizations who are adopting AI and the early lessons from the trenches. So let's move to the next page where we'll talk about our, as a nerd, it's tough for me to think about anything without an equation. So we have an equation around AI value. We have our own acronyms. So we call it systems of execution plus A to the power 4, which I'll talk about, minus PTSD. But before I talk about what do all of these, gibberish terms mean, let's talk about what do we not need to add, but what do we need to subtract from current approaches to be able to make this work. So let's talk about PTSD, and it's not what you imagine. So the next page would illustrate what we mean by this. Fundamentally, these are the four big debts or deficits that clients have to overcome to be AI ready, and why they often feel AI value is elusive. I don't think any of these terms will be surprising, but I'll talk about what these terms mean. But more importantly, why are they in this chronology beyond just the fact that it's a cheeky acronym? We have process, technology, skills, and data. Now, if you think about process, lots of people have the misconception that it's just about automating a process. We have done the same mistakes before. If you remember or care to remember what happened in the RPA or the robotic process automation era a decade back, why did it not scale? And suddenly a lot of those providers are agentic providers overnight. But that joke aside, the reason RPA did not scale beyond a point, it wasn't that it was a bad technology, but the issue was we didn't really rewire the process, but we made inefficient processes go faster. And guess what you have when you put a bot on an inefficient process? You have an inefficient process and a bot to manage. That's the thing we should avoid with agentic. The whole promise and premise of agentic is a better process at the end of this, not just a faster process. So process reimagination, re-engineering the way we work is a critical determinant. Second, technology. We all live and work with clients who've built technology stacks on a bespoke basis for a number of decades. And what that has led to are siloed and spaghetti systems which don't talk to each other. So we really believe it's time for a platform-based approach to technology, but it's easier said than done, but that's a big lift. So there's a lot of tech debt to alleviate. Third, skills. I think this, you could argue, is the most critical thing that this industry needs to tackle. Now, I would break down skills into two issues. Lots of people, we have to realize, have anxiety around AI and jobs. And Greg, given your work around skills, I'm sure you will talk about it. But reskilling, upskilling is an important challenge, and don't get me wrong. I think the bigger thing we have to now worry about with AI is what's the job to be done tomorrow? What's the work of tomorrow? I think those roles that we don't even hire for. In a few slides, I'll talk about some of the skills we take for granted today didn't exist 10, 20 years back. So what will that look like in 2030, 2035? I think that's a bigger thing because that's truly blue sky thinking. And the fourth is data. We all know, or your AI is as good as the data that powers it, but how much data is enough? Where do you put that data? We know data has gravity. All of those considerations are now becoming real for clients as they grapple with this. But the important thing is the chronology of this is really critical, because if we don't start with the process, we will end up making the previous mistakes of RPA and other automation eras. Now, let's talk about how we think this will move from a systems perspective. Now, on the next page, we will describe the evolution of what we think is the premise and promise of AI. I won't belabor or give everybody a history lesson, being mindful of my time today. But we have moved from systems of records, which are great at storing and managing data, to systems of engagement, think CRM, think conversational AI of the last 20 years, which were great at user interactions. What we are moving to, in our opinion, as Everest Group, is systems of execution. This is my point around the root word of agentic coming from agency. So these are systems which can undertake a task. Right now, they're at a task at a workflow level. Eventually, they will be at a process level. And we are already seeing early market signals around systems of execution. We have a whole body of work around how this applies to banking, how this applies to functions like marketing. So I'd urge you to check out our website for more. But you have early examples that you see at the bottom of this page around what does a systems of execution led thinking mean and what it can do. Now, let me wrap up my second talk track around what it takes AI to scale with my point around A to the power 4. So we spoke about PTSD, we spoke about systems of execution. We believe there are four big Lego blocks on the next page, which you have as you think about scaling AI as any enterprise. We've spoken about agentic, we've spoken about Gen AI a little bit, automation in terms of deterministic machine learning. Sometimes people forget the arbitrage equation. In global services, we can't forget that arbitrage is still important. I don't think it's the unique trump card anymore, but if you think about just the way the rupee has moved against major Western currencies over the last year, arbitrage and where you put your people and the right models around that, whether it's GBS or GCC versus outsourcing, that's a big lever of this pillar. And I think that's changing the way we think about the whole dynamic of sourcing. So, in terms of making AI scale, I'd urge you to think about those four A's along with how you take a systems of execution approach, not just recording data and hopefully avoiding PTSD. Let me end with my final point around maybe some crystal ball gazing. And in this day and age where what you know on Monday is potentially outdated by Thursday, it's tricky to be a crystal ball gazer, but let me attempt nonetheless. This is my point around what will work look like. Let's again take a step back before we think about this. On the next page, there will be a list of roles that we have seen, and our fundamental belief is every wave of technology creates roles we haven't seen before, right? And if you build this slide out, you will see some roles which seem commonplace today. Potentially they seem ancient, but they didn't exist even 25 years back. I know 25 years is a long time, more so in this economy, but the if you agree on the premise that technology and now innovation cycles are getting compressed more and more, it's easy to imagine that in 4, 5, even 10 years, there will be a slew of roles that we don't even hire for. We have an early signal around that on the next page. We're seeing some early new skills as well as job clusters emerging. Uh, Spoiler alert, it's not prompt engineering. I think prompt design, context engineering is a big thing. We're starting to see things around AI orchestration. I'm seeing CIO organizations where there are product management roles coming in. So the point is, yes, we have to equip our people in terms of doing better and doing differently. We also have to think jobs to be done tomorrow as AI compresses some of the grunt work right now. Now, with this, I'm going to get off my soapbox. And if you have not heard anything in the last 10, 11 minutes, I'm just going to talk about four things I feel this audience can take away from the discussion. I know we have a plethora of questions that were submitted and we'll come to it in the end. But if you really think about how to create value, whether you're a buyer, a seller, an industry association, or an investor in this space, here are the four things I'd urge you to focus on. First, on the next page, is really change the value equation. I think if you're a provider in this space or if you're a buyer, you're not buying hours, you're buying performance or value. I'm deliberately not using the term outcomes based contracting because I think the industry uses it in a variety of ways. But fundamentally, you have to focus the value of what you're doing in terms of performance, not just the input. Second, as you think about what work remains, you have to ruthlessly lean in. So you have to cannibalize almost a traditional form of value. Some of the work that exists today that clients won't pay for. And I take the example of cloud. If you think about 2008, 2009, when hyperscalers started coming in and we had the great financial crisis as well, lots of service providers, the business model was really provisioning and deploying software. And everybody thought that's going to go away. Service providers and consulting firms found new sources of value. I think we have to find a new source of value with AI and what it's doing to the market right now. Third, how we succeed in AI, while history bears some lessons and it even if it doesn't repeat, it will rhyme, but the model will look very different. The playbook will look very different. While we can be inspired by history, we cannot be limited by it. And I think it's making us revisit some of the fundamental assumptions around the pyramid, around how we contract. So we have to be inspired by history, but we have to add to it. And the fourth, this is my point around PTSD earlier, but if you're an enterprise and any organization trying to unlock value from AI, it's not about slapping AI onto an existing process. You have to do the hard yards of that operating model lift. And I think that's how you unlock more value. Now, with this, I'm going to again get off my broader soapbox. I hope this was helpful. And obviously I'm around for the rest of the webinar and happy to take questions as we do this. But otherwise, Shivani or Kerry, back to you.
Wow, that was an absolute whirlwind that you took us through. Finally, I'm exhausted already, so God knows how I'm going to feel by the end of this entire webinar. So thank you very much, Nitish. There's a load of things here that I know we've got questions on, so hopefully in the panel we'll dig down on some of those questions shortly. So that was fabulous.